Robschild. No investment advice. Welcome to the show where we view financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Monday, February 10th, 2025. Today's episode. Nothing. All I have to say is that there's CPI and PPI coming out. The charts are not, everything's going the way that they were going before, and nothing's really changing. But we'll hit the charts in a second. No major changes in the daily reminders. Watch Macro Update 110, Dominoes in the Ball, to hear me read through them. I also explain in that show my crystal ball readings and my own personal portfolio. As always, starting with the S&P 500. Well, sideways here. This is not bearish or bullish. It's literally an inside day of a larger red candle, but looking at the larger picture here, we're just chopping along sideways. TLT, my favorite place to be. If you saw Sunday night's show, you know that I noted how on Friday we broke below this previous trend line, and I said on Sunday's show, it looks like we're going to go straight sideways, and that's exactly what's happening for the moment. It's sort of like the market is just waiting for something else to happen. It's kind of like that theme I always reference with Napoleon Dynamite, and in this I referenced Napoleon Dynamite as Trump before. Now I'm referencing him as Mr. Market. So what are you going to do today, Mr. Market? I don't know. Gosh, whatever I feel like. Or no, whatever I feel like. Gosh, right? That's sort of what everything is feeling like, including treasury rates here. Small little update on the Fed funds futures. We can look at the Fed Watch tool from CME Group. Pushed out the first cut now all the way to July. Before it was going between May and June. Now we're pushing it to July. Again, these things change on a daily basis, and the further out you look, the harder it is to see what's coming. Any kind of black swan event or some big announcement can shift things around massively. We have CPI and PPI later this week, and there's a good chance of that pushing all sorts of things around. Another way to look at TLT is the upside down version of TLT, sort of. It's the 10-year Treasury note yield. I said it, looks like it's moving sideways more than anything, but for me, there is a bit of a bias to the downside on yields, only because we have this very distinct, very clear trend line hitting thrice from September 1, 2, 3, 4 times, and then breaking down, and we haven't been able to break back above it. And to me, that says that there's still sort of a bias that yields want to go lower. The bulls on yields, we'll say, or the bears on bonds do not have many legs. They don't have much strength here. So although it looks sideways more than anything, some of these trend lines suggest it will be more difficult for yields to rise than it will be for them to fall. Oil also, crude oil also looking, on a daily basis, we went up a bit. I guess part of this is there's some news of supposed recovery in China, which, aligns and makes sense with copper, the copper market getting a little bit of a bid here today, along with oil and Chinese equities really getting a huge pop today. But back with oil again, we had been looking clearly bearish. This is no longer clearly bearish. This is like, okay, we're going back to some kind of neutral zone. This is not bullish, not bearish. KWEB, my favorite ETF of Chinese equities, holding the Amazon and the Netflix and Facebook. All of the major internet companies of China are in this fund, highly undervalued compared to the types of valuations you see in U.S. equities. And even by themselves compared to like regular PE ratios, these things are massively undervalued. So it's a very exciting market that I have something like 13-14% of my own portfolio in, and we popped up this entire index 3.27% today. This is starting to look heckish bullish, I'm going to say. We had this from the original giant pop when they said we're taking out the stimulus bazooka and things went to the moon. Since then, we've sort of developed this little trend line here that we've been bumping our head on. Recently, we broke through it, we tested back down, and now we're closing higher and higher. This is extremely bullish looking chart. Again, I only use charts to sort of give me a sense as to where things may go in the near future. I'm not buying more because of this, but I like to keep track of what's going on, and also to help figure out exactly where to exit. My original plan has been for a long time, if you've been following the show, to exit this fund around the $50 range, which I still think is cheap, but not unbelievably cheap. That'd be considered for me to be a somewhat normal price valuation for this ETF here, based on the company, the underlying company's valuations, let's say. But yeah, this chart is looking enormously bullish at the moment to my eye. Like I said, this is starting to make sense why Dr. Copper is getting excited here. If China all of a sudden is doing well, well, they're going to use a lot of copper. They're going to need a lot of copper. Copper is used for everything. And copper's, look at Dr. Copper, the PhD in economics, looking strong here. There's no other way to put it. Lastly, gold. I said ever since we broke this double top here, it looks like we're going to go up to the $3,000 level. We're in arm's length reach of 3,000 at this point. I thought, I remember I talked about on the show last week, it looked like we may have lost some momentum in these two candles here. But on, I guess Monday, today's Monday candle, this is on UTC time, so that's why you have two candles here. But this large movement upward in gold since this little pause here, it adds to the bullishness. It adds to the momentum. It looks like we're most definitely headed at this point up to the $3,000 level. But again, I don't own gold, and I'm not buying gold right now because I'm not a momentum trader, and I'm not interested in things that are enormously overvalued compared to their historical values or their moving averages, that kind of a thing. It's not my cup of tea. Too much risk. But that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.